2, 3, testing 1, 2, 3. Boom. Hey, good morning, everybody. How you doing, huh? Hope you had a wonderful weekend. You're looking good. Well, today, it's another day in front of the Forex charts. Our agenda for this webinar is to go through the Commitment of Traders report, go through the calendar, go through some charts, maybe look for some weekly setups. That should only take us about an hour and a half. So without further ado, let's get going. So welcome to Forex.Today. This is a live trading webinar. However, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you access to the Forex market, but also energies, metals, indices, and binary options. We do these sessions every single day, Monday through Thursday, here at Forex.Today for TradersWay clients for free, and then every Friday at FXStreet.com. And I believe we have non-farm payrolls coming up pretty soon, which would be my 114th month of trading non-farm payrolls in front of a live audience. 114 months. Wow. So anyways, good to see you guys. So this session is held at Forex.Today. That's where we are now. And we're going to look in this, this section here under news. I'm not sure if you can see that. We're going to go under this news area, and a couple of things under that. We got our COT, the Commitment of Traders report, and then we have the calendar. So we'll go through and look at the event risks and such this week, and obviously that goes all the way up to NFP on Friday. Lots to look forward to. We're also starting to get some of the basic inflation information from around the world rolling in. Asia, not so much. Europe, a little bit. So it's a pretty good start. So here we are. So let's go to Forex.Today. This is where you registered this morning. By the way, did anyone go back and review the video from our last meeting here at Forex.Today? How to get filthy, stinking rich trading Forex. It's not a typical title. But there's some golden nuggets of information in there, that's for sure. Remember, one of the themes there is lack of diversification. But how to do it while still at the same time keeping your risk low. Let's start with the calendar because it's higher up in the alphabetical order. Casey said, oh, he did watch it, did leave a comment, did leave a like. Thank you, Kenny. I appreciate that. Good morning, sunshine. You know, it's been raining here nonstop, just torrential downpour. Lightning at 6 o'clock in the morning. Who gets lightning at 6 o'clock in the morning? But it's just been raining all night, about 15 hours straight, just straight up rain. My house. All right, so let's filter some of this. 1 and 2 stars, maybe, see how it looks. Okay, And so this is what I was talking about earlier. Oh, I guess I got to apply this. Lots and, oh, you know what, I got it backwards. But look at all this this stuff out of Europe, right? PMI service stuff. Your Eurozone PMI, German PMI, French PMI, Italian PMI, Spanish PMI. It's all coming in, and it's going to be a little better than expected, which is good. So let's go 3 stars and 2 stars. Okay, so manufacturing data out of Canada. Why not? Right? Why not? Let's start with some nice Canadian data. Canada sure trying to hold the line, aren't they? They're with the kitty cat. They're really trying to hold the line. So we'll see. If the Canadian dollar starts getting strong, I wonder what that means for commodities. I wonder what that means for oil. So we'll have to keep an eye on that, right? Because oil's been above, what, $44.44 for quite some time now, right? At what point are we going to call that a bottom? Okay. And then today at 10 o'clock, we got ISM manufacturing. What I used to do here is look at the employment subcomponent of ISM manufacturing. And some people will say, well, Wayne, why do you do that? Because really the US is a service economy, not a manufacturing economy. And I say, so that is true, young grasshopper. But what I'm looking at here is how does, all the Fed policy and the money printing and all that kind of stuff that's happened over the last many years, when does that get down to the average person, right? We're trying to find some inflation here, and we're trying to see, wage growth and increased consumer spending and stuff, and you just might find it under sort of the factory worker index, if you will. See what the factory workers are doing, and you might find what the broader economy is doing. You know what I mean? So that's my trickle down economics indicator, if you will. Take a look at the subcomponents of ISM manufacturing. If that's going to do good, everyone's going to do good. Lowest common denominator, perhaps. I know several people that work at businesses here in Atlanta that revolve around supply chain management, shipping companies. And that's because the Atlanta airport is the busiest airport in terms of how many people fly through it. And let me just tell you, if you're the busiest people mover in the world, freight's pretty high too. And so anyways, they have a lot of warehouses and forklift drivers and stuff. And it's interesting, if the forklift driver is buying a 70-inch TV for the Super Bowl and driving around in a Cadillac Escalade, then that's good. That's good for the overall economy. And so that's what I'm kind of looking at here is how does the warehouse worker feel? Do they have a job? Is it a good job? Is it paying well? Is it stable? And then, of course, are they spending all their money? And that's good for when poor people spend their money, that's good for wealthy people. So that's my canary for that. And then how about this thing, the Reserve Bank of Australia? We've been talking about, lack of inflation there. Are they going to raise interest rates? No. And some will say because they've been missing their inflation numbers recently, and this as of last week, we started talking about the potential for the RBA to cut interest rates tomorrow. Okay? Now, my advice to you a week ago, approximately a week ago, probably not quite, six days ago, I asked you to look at the Australian equivalent to the Fed funds futures market and try to look at the probability of a rate cut based on the change of pricing in short-term bond market out of Australia. Did anyone actually do that? That's pretty advanced, you know. That's like super extra bonus points. Well, there we go. Thank you very much. Yeah. Well, how does it feel? I mean, that's pretty smart money stuff. You're actually doing the right things that will lead you to success. Which at least it won't lead you to failure, I don't think, right? Yeah. Well, good for you. I mean, seriously, that's pretty hardcore awesome. And what does it tell you? You know what? Don't tell me. Don't tell me. Forget it. Make everyone else do the work. But thank you for pulling up that link. So again, the way that professional traders that buy and sell short-term Australian bonds, they're pricing in real time with real money their opinion of where interest rates will be in the near future. And if interest rates fall, things that will affect the price. For example, if I'm holding a bond that pays 2%, guaranteed to pay 2%, will always pay 2%, but tomorrow interest rates fall to 1.375%. Well, I guess I should say, 1.75% is what I meant to say, right? You understand? If tomorrow interest rates in Australia fall to 1.75, and I have an Australian bond that pays 2%, what happens to the value of my bond? It's still a short-term bond. It has the same default risk as the other bond, but mine's worth more now. I have a capital gain in the valuation of my bond. So you will see if the bond market believes the RBA will cut interest rates because they're already pricing it in, because that's what the market does. It's the purpose of having a deep liquid pool of bonds. All right. So anyways, that's cool, man. That's the money market. So the money, you want to follow the money, right? There's a couple of things every trader should know when it comes to making money, and I don't even care what market you're talking about. Right? Buy low, sell high. Right? Follow the money. That's how we got into Forex. We talked about my history a couple of sessions ago, you know, how I got into Forex. And, you know, I read at that time Forex was like $2 trillion a day. And I thought that was stupid. I'm like, who would write such a stupid article? There can't be $2 trillion a day. There's not enough money in the world to be $2 trillion a day, is what I thought. So I looked into it and I'm like, oh my gosh, holy moly. The foreign exchange market really does have $2 trillion a day in volume. Holy moly. And so I quit my job and said, Mama didn't raise no fool. You go where the money is. Holy smokes, $2 trillion a day. Oh my gosh, what is that per year? I don't have a calculator that big. Go where the money is. Follow the money. Spanish unemployment, oh, it's going to be awesome. But what I'm starting to look for, and we did talk about this, I guess around summertime, over the next 6 months, starting kind of like the end of this year, which I would consider, you know, we're in November, right? There's 1 or 2 weeks of November that are basically useless trading. Not always, but can be. And there's a couple of weeks at the end of December that could be useless trading. Not always, but can be. So we're really down to the last 4 hardcore weeks of the year, right? So I'm already thinking next year. But next year, especially in the first half of next year, I've asked you to look for green shoots out of Europe. And I think we're going to start getting some of these green shoots. And so, you know, Spanish unemployment. Maybe it gets better. Okay? Maybe we start getting a little bit better. Factory orders. Okay, well, we want to see inventories rebuilt. I think we have high inventories going into Christmas season already. So if you see a fall in orders, all right, well. But, you know, I've asked you to watch factory orders and, you know, factory capacity and utilization numbers out of China. Well, you might want to watch it out of the U.S., but, you know, I wouldn't freak out too much about this. I think we're going through the normal cycles. You notice all the central bank speeches. Look at this. Draghi speaks, Jordan speaks, Bailey speaks, Williams speaks. They're all out. Remember, I asked you to watch the Fed. You know, when the Fed guys going out and doing interviews and speeches and stuff, they're going to be teeing up the ball for a December hike. They need what they're doing, and they know this. Their communication, for some reason, isn't working. So they're going to go out and they're just going to keep telling people, we're going to raise in December. We're going to raise in December. We're going to raise in December. And the better they do, the more likely the dollar is going to get strong. So pay attention to that. Okay. All right. Oh, and yeah, and why is the ECB going to add to quantitative easing? Because, you know, they want to keep euro weak. They want the dollar to keep strong, and so they can kind of piggyback on the Fed move and really, especially just on the short term, seriously weaken the euro. And then I think they'll let it float back a slight appreciation because they need to save Italy and Spain, but you know, then Germans freak out. So you know, it's a delicate situation at the ECB. I think it'd be great if it came down, tickled parity, and then settled around 110. Okay. So Aussie and Aussie and Aussie. Trade balance. Isn't this just fantastically weird? The expected number for Australian trade balance is still -3 billion. So if it's only -2 billion, they'll be happy. Australia is supposed to be a net exporter, ladies and gentlemen. Think of this, guys. In a healthy, normal world, Australia is supposed to be exporting things. Right now, they're running a trade deficit. This is topsy-turvy world here. This is where you catch Batman robbing banks. You're like, what? Come on, Batman, you're supposed to be a good guy. This is bad. You know, it just ain't supposed to be this way. Right? It's just unnatural. This is like dogs living with cats. So, wow, we need to watch this Australian trade balance. So this means, right, what we want to see is demand for the Aussie currency. Okay? Right now, this says when this is a negative number, okay, that means Australians are importing more products and services than they're exporting. Okay, so they're importing. That means they buy from foreigners, right? So that means they take their Aussie dollar and they exchange it in the foreign exchange market for foreign currencies. They're selling their Aussie dollars to buy foreign currencies, to buy foreign goods. So if this is a negative number, the Aussie dollar is weak. That's just flat out how it works, guys. You want to be smart money, right? Just say, well, you know, I've been following the balance of trade data out of Australia, and I'm still, you know, net short. Isn't that neat? Now, this is a number that only comes out every so often, right? It's not something it updates every day. But you could look at that and say, well, maybe that sets your bias. Balance of trade. As long as Australia, and this is Australians perhaps doing it. I mean, they're importing more than they export. Well, if Australia just stopped importing stuff, then the balance of trade would be, well, better off. No one would be buying stuff from Australia, but Australians wouldn't be buying anything from anybody else. It'd be zero. Aussie would be stabilized, right? They would be doomed to be watching bad movies, but they'll have to watch Crocodile Dundee 9 again. But right? So watch these numbers. That should be a big positive. Okay? When this swings, like how about this? Watch the trend. If you want to be smart money, watch the trend in trade balance data, right? The balance of trade. And find a trend of falling negative numbers and then eventually rising positive numbers. And if that's the trend, then the Aussie dollar should be gaining strength along with it. Okay, because that means the world is buying lots of stuff from Australia, more than Australians could possibly spend. And foreigners are driving up the value of the Aussie dollar because they're fighting each other to get the limited amount of Aussie dollars so that they can then give it to Australian companies. And Australian companies love it when customers give them money. Richard says, well, you know, commodity price is down, therefore the value of the exports will be lower. Okay, but they're still buying stuff, right, Richard? And they're buying at those low prices too. They're still buying more than they're selling. Yeah, I mean, so you're right, of course. But if, let's say, commodity prices go up, let's say they double today, but for some reason that doesn't change demand. Obviously it would, but let's just say, well, then they're still going to be buying at the higher price, and they're still going to be selling at the higher price, and they're still buying more than they sold. So no matter what you do to the valuation, they're still importing more than they're exporting. That's it. It doesn't matter. Look at it not even as the value of money. Look at it as maybe just units. More units are being shipped to Australia than out of Australia. And that's going to be negative, right? That increases the supply of Aussie dollars internationally. And that's what we look at, right, as foreign exchange traders. There's an increase of supply, and therefore a diminished valuation. Cool. Is that clear, guys? Or is that a unique way of looking at it? Is that new for anybody? Does anybody say, wow, that's fabulously interesting? Yeah, balance of trade. Sort of, yeah. And then, do you guys ever track things like current account? Because what we're talking about here, balance of trade is a cash flow issue. It's finance. The capital account is accounting. And that could also affect the valuation of a currency. Well, there's there's current account and there's capital account. So again, a current account is more of a cash flow issue. A capital account is going to be, if you're an American, you know, how many skyscrapers in London do you own? Okay. You own it, but it's in London. You can't bring it back to the United States, but you do own it. And it's something that goes on your balance sheet. It's an asset. And that needs to be accounted for here in the United States. How much does the U.S. own, or U.S. citizens, U.S. government, doesn't matter. How much do Americans own globally? But then you still have to account for your liabilities, like, well, what if you sold something here in the United States to a foreigner? Well, that needs to go down. It's here in the United States, but it might not be American. Rockefeller Center's in New York City, but if they sold it to someone that lives in the UK, well, it's not really American anymore, is it? So anyways, that all gets done, but that's an accounting issue. Like I said, that's not a cash flow issue. It's okay. But it is like a balance sheet, yes. All right. PMI out of China, should you care? Yeah, you should care. And it should be over 50. I don't think we're going to get 50. Okay? Anything over 50 is good. I don't, you know, I don't know. Just whatever. Let it happen. Should be interesting. I wouldn't expect too much out of it yet. It might be a noisemaker, you know, maybe catch a scalp. Yeah, James, right. If the Chinese buy an oil field in Texas, is it still American? Right. So that would have to be accounted for, right? Now the problem is if you start selling a whole bunch of assets just because you're broke, eventually you won't own anything. It's like, you know, I like playing Monopoly with my children, because what happens if you don't own any property? Even if you're rich, you got a big ton of money because you sold all your assets. Now you're liquid and you have lots of currency, but you don't own anything on the board. What's going to happen? What's the guarantee? The guarantee is you're going to end up spending that money on my rent. You know what I mean? Eventually, you're going to keep landing on property. Oh, well, pay that out, pay that out, pay that. You have no income except going around and collecting $200, but that's not very sustainable. And eventually, it's just a matter of time, you will go broke because you don't own anything. So at one time you were rich because you sold everything you owned. Now you have cash in your hand and you feel good for now. Right? Woo, 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 wipe out. Yeah. So anyways, so eventually, you know, you got to be careful what you sell to foreigners because you should own something in your own country, right? All right. All right, so we get that out of the way. And then, you know, middle of the week here is just PMI, 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 PMI. And I'm hoping out of Portugal, Italy, Spain, you know, that we start seeing, you know, half decent numbers out of the PMI. Okay. I'd like to start seeing some green shoots from from the ECB's investments in quantitative easing. Okay. Well, James, what's the guy's name from Oracle? Larry Ellison. Larry Ellison bought Lanai, the Hawaiian island, Lanai. He bought it. the whole island. Let me tell you, it's not like a little tiny island. It's one of the islands of the state of Hawaii. So who owns Hawaii? Well, Larry Ellison, the founder and CEO of Oracle, he owns a big chunk of Hawaii. Isn't it amazing? One guy. Okay, anybody here? Yeah, all right. Now we're having some pretty bad weather in my part of the world. Left over from a hurricane, I believe. Excuse me. Let me get a browser going again, and we'll just continue like nothing happened. Thank you for your patience, though. All right, and I guess we got to finish with the calendar. We'll just skip to 3 stars only. All right. Kiwi unemployment. Yep, because we want to watch what's going on there with their central banking policies. Okay. We did trade balance already. PMI out of the UK. Yep. Want to see a good number out of there. Trade balance out of Canada. Trade balance out of the United States. Yeah. Lots of trade balance, huh? That's good. Your opportunity to dive in and pay attention to these things. ISM services. Okay. Again, I like to look at the subcomponents of these things, but a big number is a good number. Janet Yellen speaking. Governor Stevens speaking. Okay. More Aussie data. Big Aussie week, man. What can I say? Then Bank of England, will they raise interest rates? What will the MPC do about their asset purchase facility? You know, the vote, the discussion, the summary. You know, awesome. And then Carney's going to come out and speak. So just phenomenal day for the British pound coming up. Okay. So for example, if you're interested in Aussie or you're interested in British pound, then you should be thinking about it today, not waiting until, you know, until the news actually comes out. Maybe get into some of these trades and move your stop to break even before the event comes out. Okay? RBA monetary statement. Yeah, probably important, don't you think? And then unemployment data out of Canada, unemployment data out of the United States of America. So very, very, very important moves for the commodity currencies, for the Bank of England, for the United States of America. But yeah, Aussie and CAD, I think, will be very interesting. And then British pound, we're already starting to see some of the upside surprises out of the UK, aren't we? That's because I believe we're kind of cutting the fat on the old data a year ago when things were so bad. They're a lot less bad now than they used to be, right? KC says he's got a trade on. Which one do you got? What are you? Pound, Aussie, what? Long? Oh, good job, Marina. Yeah, cool. All right, so let's go to the COT. The orange line here, big increase in shorts. Okay, big increase in shorts, price come down. Small decrease in longs. That's exactly what we talked about. That is exactly what we talked about. What happens when the euro dollar hits resistance again and the bears get back into the market? That is what happens. You make 500 pips the easy way. Love it. That's just perfect, man. Textbook. Okay, how about our piggy? Still basically neutral. Okay. Significant decline in bearishness. Okay. Which is interesting. And then a little offset here on the bullishness, but that's just because of a decline. So we'll see what happens. And like I said, I've been expecting that over the next 12 months, much improved data out of the UK. And a couple of reasons make me think this. One, how you collect and report the data. But two, Carney has told us, even in the big crash of oil prices, he said, don't worry about it. It's just oil prices. That's what's holding us back. It's only oil prices. It's only short term. So everything else is in play. And the fact that oil prices are down will only help things in the future. So remember, the central banks try to tell you. What Mark Carney was telling us is when the British pound is low, find an opportunity to buy it because it's probably cheap. Remember, you don't buy because prices are falling. You buy because something's undervalued. And that's what Mark Carney was telling us. And if you remember the conversation 6 and 9 months ago, I used to explain how conservative Carney is as a central banker. He was so conservative when he ran Canada that Canada never hit the global financial crisis because Canada was in good situation financially, especially relative to the rest of the world. So he's a conservative person by nature. And so when Mark Carney says, look, inflation rate is zero, in fact, we're looking at deflation, he's like, don't worry about it. All the pieces are in place. Right? And that the British pound is essentially what he's saying is undervalued. Okay? It spiked up then, and then who knows? But this will be very interesting. And so, again, I foresee improved, greatly improved data out of the UK over the next 12 months. All right, look at this thing. Yen, still neutral, slightly bearish. Okay, we'll see what happens. Okay. It is important to note that we have more bears and less bulls. Okay? That's important, isn't it? More bears, less bulls. Remember, it's not an opinion, that's money in the market. There are less short positions than there used to be. No, sorry. There are more short positions than there used to be, and there's less long positions than there used to be. Okay? That's good if you're short Japanese yen. Our friend Aki, no change. Isn't that amazing, huh? Just no change. Nothing. Absolutely no change. Kiwi, slight increase in long positions, slight decrease in short positions. Prices have moved sideways, but the market is net long again. Okay, for the last 2 weeks, the market has been net long Kiwi dollar. I think maybe their discussions as a central bank this week could be important to the value of their currency, don't you think? And what commodity has high elasticity to the New Zealand dollar? Dairy. And when does that come out? When does the auction data come out? Okay. So pay attention, right? Don't you love our meetings, guys? Like, seriously, do you ever bring it up? You're hanging out with a buddy or maybe your spouse, just hanging out, and you're like, yeah, discussing the elasticity of dairy prices in correlation to New Zealand dollar valuations. I love it. No, that's the smell of money, honey. All right. Yeah, that's an extra benefit, Lucas. All right. So let's do some technical analysis, see what we got in store for our week ahead. So these are oil prices. Here's the low end of our range, which we tested not long ago. Okay. Because I have a simple mind, I call it 44.44. It's not quite accurate, but anyways, we're at the higher end of our natural state of being, right? Um, this should fall to the lower end of our range, right? So this makes me think of a couple of things. One, it should do it, and it will fall. And then two, is it meaningful if it doesn't fall? If maybe we just come down, we're at 46 now. What if it came down, tickled 45 today, and on Wednesday or Thursday, we're at 47, 48? I think that could be huge. What are you going to trade if that's the case? CAD. Okay, versus what? So yeah, so that might be interesting. So why don't you, while you watch oil prices, why don't you also watch CAD yen together in real time and say, I'll in the next 36 hours, if oil starts heading up again, that we have a new trend of higher highs and not lower lows, okay? And this is kind of how I'm looking at the world right now. So what if, just what if today we end up seeing a pattern like this? Now, I'm drawing it on a 1 hour chart, but what it's really doing is it's a 4 hour to daily type pattern. But that is what would happen, right? That's what you're setting up now. Now, not in 3 days, and you'll say, why didn't I do it then? Well, no. That's why you're doing it now. If oil prices go up, then you're long CAD yen. So what are you doing? If that's what might happen tomorrow, then you need to be doing this today, right? Remember, the vast majority of the time when we get together to do our strategy sessions, I'm setting up tomorrow's trades. Today's are already done. You've already planned them. You're probably already in them. So this could be between now and our meeting tomorrow, you might find yourself long. Maybe. If oil goes up. So start watching oil, start watching Canadian dollars, start watching the yen pairs. Ideally what you see is all yen pairs are going up. That's called correlation. We've talked about that. Then what you could do is relative strength. Which one's going up faster relative to others? And then what may or may be not, what may be causing that strength or that weakness. Okay? Right? You got to be the master of it, right, Michael? I was listening to a billionaire talk about how he made his billions investing in the stock market. Do you want to know the secret? I already did. We just looked at it 10 seconds ago, Michael. Here's how he did it, guys. He says he goes into an industry he doesn't know anything about, and he learns everything he possibly can about the industry, and he becomes an expert. Then he looks at all the companies in the industry, and he starts analyzing them one after another. And one of the things they do is they create valuation models for every company. And they try to, in their own interpretation, actually by stripping down the company piece by piece by piece, actually looking at all the different parts that go into this company, what they do and all that kind of stuff, they try to put an honest valuation on it as if they were going to buy it. Okay? And really, like if they were going to buy every stock and at a premium, because they're actually going to buy the entire company, what's that price going to be? And then, of course, what is the stock valuation? So, the market cap. So they might find that the company is worth $10 billion, but what if all the stock, if you look at how many shares are outstanding, plus the price per share, what if the company is, it's only $8 billion to buy all the shares? So they know the company is actually undervalued by $2 billion. And then what they do is they look for a catalyst somewhere in the future, in a year or two, something that would suddenly help the rest of the market uncover this hidden value. Because for some reason, the market doesn't get it, that this company is worth $2 billion more than it currently is priced at. So if he can figure out what that catalyst will be, then he'll actually go out and they'll buy it, or at least buy a huge chunk of the shares, because they know it's almost free money. So I think the point of it, what it means to me, is that he does research and he masters the entire industry first. Okay? And then he starts placing valuations on individual companies as an expert now to uncover the hidden value. I've asked you many times to start with one currency or one currency pair, ideally one currency, and just master it. Learn absolutely everything you can. In my book, I call it, I put a whole chapter about becoming a greenback guru. Right? Instead of just trading Euro USD every single day, day after day, maybe you should look at all dollar pairs from the point of view of the dollar only and just become a master. And the balance of trade data is 53 billion trade deficit, and that, the trend in that. And you're just like, this stuff. You can recite trade balance data from memory. Because you just know, you've done the research and you're looking at things and you know when the next meeting is, right? You can't wait till December 16th. You can't wait for non-farm payrolls coming up on this Friday because you know what a good NFP number is going to do to the US dollar in anticipation of what's going to happen on December 16th. And if you don't know what's happening on December 16th, you don't have a chance. Right? So just think of like someone else in a similar but different market, right? He buys stock. But he has billions and billions and billions and billions, guys. This guy can donate $1 billion and still have $1 billion left over to play with, right? He could throw away $1 billion and it wouldn't hurt, wouldn't change his lifestyle. So what does a person like that do? He starts by mastering something first. Now, apparently the guy's like 70 years old now, and he's an expert in almost every industry in the entire world because he's dedicated his life to becoming an expert in one industry at a time. You can't just fast forward and just say, I want to be an expert in everything, and I just want to be a billionaire, and I want it to be easy. And like, dude, this guy put in 30 or 40 years of hard work. He's traveled the entire world countless times because he'll master something like the automotive parts industry. In fact, what he'll do is he'll break it down. He'll become a master of the OEM in auto part industry. And then he'll become a master of the retail side, you know, the Napa Auto Parts and the Pep Boys. That industry he will become an expert in. And then there's, there's an industrial side supplying car parts to, and so on and so forth, over and over. And you might realize one industry might have 7 industries, and it might take him 6 or 7 years to become an expert in each of those. And he'll buy 2 or 3 companies, and he'll just make hundreds of millions of dollars because he became an expert first. I want you to do that. I want you to have an opinion, not just sit down and trade noise in the charts per se, right? Not just price action only. I would like you to be an expert. I'd like you to say, I have an opinion of what's going to happen to the British pound in the next 6 and 12 months, and I'm going to proactively, using price action, trade in that direction of my bias. And here's the reason I have the bias. I've looked at GDP, I've looked at balance of trade, I've looked at the trend in employment. In fact, I've looked in the sub-component of various indexes to get things like income and wage and consumer spending. I'm looking at factory orders and inventory levels and factory capacity and utilization statistics. I know everything you could possibly know about the British pound. And you can give me your money and I will trade it profitably because I am the master of the universe for the great British pound. And I can foresee the future through my analysis. See, that's what people want, right? That's how you raise money. Why would they give you money? Because you're the world's foremost expert in the great British pound. And you can foresee the future because you've done the hard work. Boom. Imagine how much better you would be as a currency trader if you were the master of something. And I'm just trying to show you, like, it's actually a repeatable model that lots of people have made their fortunes doing. Do the hard work now, become an absolute expert, and then trade your expertise. I mean, look, how hard can it be? The British pound's either going to go up or it's going to go down. What's the problem? Right? It's either going to go up or it's going to go down. What's the big deal? Well, if you're trading in both directions, swinging both ways like a broken gate, wandering, hopeless night, right? Trying to navigate with no stars, then yeah, it's going to get complicated, right? Turn the lights on, man. Right? Yeah. This is your job, right? And just try to like always think outside the box, if you don't mind the cliche. One day, well, how about this? The secret to making a lot of money in Forex eventually becomes assets under management. I told you this, was it Friday at NFP or at FX Street, or maybe it was Thursday we were talking about it. But what I found doing my own business planning and pro forma cash flow statements and stuff, that compound interest takes care of everything. You can, and the secret to success is lowering your lot size relative to assets under management. How much is in your trade account? And eventually, the secret is assets under management. So one of the things I discovered is a paradox. The less I pay myself every month, and by pay myself, I mean withdraw money from my trading account. This is what holds most people back from becoming a billionaire or whatever your financial goal is. Because what happens is you make money and then you spend it. You make money and then you spend it. And what happens is your account never really grows beyond a certain level because you have to spend it. Right? Think of it this way. You double your trading account, and then what do? You take that money and you put it to a down payment in a better house in a better neighborhood. All right, fine. Another year or two goes by, you double your trading account again, and then what? Buy yourself a couple of cars because your cars are getting old. Dwindle your trading account again. Another 2 years, you double it again. Then what? Now you got to buy a boat. Draw down your trading account again, right? And all of a sudden you never get past a certain level because you keep spending your money. Well, here's the interesting paradox. The less I paid myself every month, the more money I made at the end of the year. Because the trading account would grow and the lot size would grow relative to the growth in assets under management. So therefore, if I paid myself a smaller level now, maybe over the course of 6 months, I don't make much money. Maybe over the course of a year, I don't make money. But over the course of 2 or 3 years of living on modest income, but just letting my account grow, all of a sudden, at the end of 3 years of living modestly, and come on, dude, live modestly for 3 years? Well, what'll happen is your account size will grow so huge. And what I want you to do is keep your lot size as small as you possibly can for as long as you can, so that all of a sudden you're making way more than enough money, and your risk level, as defined by the lot size versus the account size, is so small that you could trade like this for years and years and years without any fear. Assets under management. Well, another way to increase assets under management is to trade other people's money. So you should also look at it that way and say, well, if I'm going to trade other people's money, why would they give me money? And what will happen is it should improve your focus. You say, well, the only reason they'd give me money is because I'd be an expert in something. Right? Well, good. Well, Eric, what's your expertise? Well, I don't really know. I just kind of sit down and I just fire off a bunch of trades every day. Well, that doesn't sound like an expertise, right? So the Zulu effect. You guys probably know this one. There was a book written, I don't know, at some point a book was written by some person, and I think it was called the Zulu effect, or maybe it was a sub-chapter. I don't know. Somebody wrote something sometime. It wasn't me. But the Zulu effect is you can become an expert in anything if you focus on it for 1,000 hours. 1,000 solid hours, though, guys. Solid. If you study everything there is to know about the Great British Pound, it will only take you 1,000 hours. Now, I'm an entrepreneur. I'm like, I can bang out 1,000 hours in like 3 days. Because I become obsessed. I want you to be obsessed. obsessive compulsive, right? You're totally obsessed. Yeah, but you don't need 10,000 hours, Eric. Come on. I can be, look, seriously, I could sit down in 1,000 hours and learn brain surgery. I might not know anything else, but I'm a pretty bright guy. I'm just like, yeah. All right, good. So we drill a hole, got it. Next, right? 1,000 hours is a lot. Okay? 1,000 hours is a lot. What would you do? I would start at the Bank of England website, and I would go through almost every page. You see what I mean? I really would. I've told you guys dozens of times. I'm even surfing central bank websites that are not even in the English language. I barely speak English. So you're like, what? That's weird. I know, but I'm obsessed. So like I would start and I would go through all of that and download reports and there's a lot of central bank websites, especially the Fed, guys. The Fed's great because it has about 5 or 6 different websites because there's more than one central bank in the United States. And some of them, like the St. Louis Fed and the San Francisco Fed, they have fabulous educational material. It's just unbelievable free resources. But you probably just never have checked it out. You want to become an expert by, I don't know, staring at charts all day or something. I'd rather you stop trading altogether and just spent 1,000 hours on various central bank websites. I think it'd be a better use of your time. But, become an expert in something. In my book, like I said, I call it the greenback guru. You learn everything there is to know about the US dollar. You don't know anything about anything else, but you could give speeches about the US dollar, and you have a 6 and 12-month outlook that you could discuss inside out, upside down, backwards, right? You just know it. You could talk about US dollar from any angle, from any approach, for any reason, whatever the topic is. You got it, man. As long as it's US dollar, that's it. And then they're like, well, and how does this affect the ECB? And you're like, I don't know anything about the ECB. But let's go back and let's talk about the Fed. Let's talk about monetary base versus monetary supply. Let's talk about that 16 trillion, 1.6 trillion overhang at the banks. Let's talk about this. Let's talk about that. Do you see the balance trade data? Oy vey. Well, what about the capital account? And all of a sudden you just got that stuff. So that's my advice, guys. That's where I'd step up. And there's a couple of weeks, like I said, sometimes the last couple of weeks of November are kind of dud trading weeks because of the holidays in the United States. And then the last couple of weeks of December can be dud weeks just because of the Christmas holidays in the Western world. And then you got year-end stuff that really most professional firms are just kind of, they want to clean up the stats before having to report it in their annual reports. So you have at least 4 weeks in the next 8 weeks that you could apply some of this goal. Like, what if you actually did this, guys? What if you actually got out one of those clocks that independent contractors use for billable hours? And you sat down, you downloaded it. What you do is you hit start, and it starts tracking your time. And it'll ask you, so what are you doing? What's your project? And you're like, all right, I am going to the Bank of England website, and I'm just going to surf through the pages and create a to-do list for me to go back and start downloading stuff, right? So you just want to surf. So you actually track it, okay? So you document what you're doing, and you actually surf. And let's say for an hour and a half, you're just going through the Bank of England website, looking at things that you might want to review later. Just checking it out. And at the end of it, you got a list of maybe 12 or 20 things that you want to review at the time. and then you hit stop. And you've actually documented 90 minutes, 1.5 hours. Cool thing is you only have 998 and a half hours to go, and then, by definition, you'll be an expert. Imagine that. Then all you have to do is the 1,000 hours, which is not that easy, but it's not that hard either, and then you can walk the halls of the universe with your head held high saying, well, I don't know much, but I know I love the British pound. I don't know much, but I know I love you. Because I'm an expert, baby. Oh, da, 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 da. I'm an expert, baby. So, that's it. It should be an easy goal. And imagine when you're 70 and you're a billionaire, you've become an expert in almost every currency that is worth trading on this planet. Somebody asks you about Sweden, you're like, oh man, I know everything there is to know about Sweden. Let me tell you about it. Okay? You see what I mean, guys? I hope that fires you up. I mean, it's real. That's it. I mean, that's the real key to success. And then you trade what you believe to be true on your charts. Okay? One of the guys in my Harvard class, he's an oil trader. That's all he does, oil. Oil. That's it. All day, every day, oil, oil, oil. Did you know he also looks at the Fed Fund futures rate to figure out what's going to happen to oil? Are interest rates going up? How will that affect oil? Right? So we'll do this in reverse. What's the CAD yen going to do? Well, what's oil going to do? Well, why don't you watch oil? And you'll find it's all interlinked, right? It's a fabulous world, this thing that we trade. So let's gather again tomorrow. I apologize for that 5-minute pause in the middle of the video. It's pretty bad weather here. But I hope you love trading. It's a tough gig, this thing. So you need control to develop consistency, right? Let me approach this one way, okay? Let me just approach the same thing from a different way, just a mini bit longer. I've discussed in the past that the reason you have a trade plan is that you need to have control, and with control you have consistency. Therefore, that consistency you can measure through statistics and look at strengths and weaknesses and try to improve, but you can never improve unless you have control, and you can never have consistency without the control, right? So that's why you start with a trade plan. And this is also why I asked you to start with basic technical patterns like double bottoms with higher highs, like we have here. Double tops with lower lows. Okay, so now you have consistency in trade plans. You develop control from that. Now you have that consistency. And then maybe, just maybe, once you realize statistically that the majority of the time you make money on that particular setup, that you develop confidence. Well, what if the control and consistency became this idea that you have spent a dedicated amount of time allocated to becoming an expert, and you know it, and you're actually tracking it? Like I'm funny that way. If I say I'm going to do something for 1,000 hours and that will make me an expert, I will document it for my own purpose, so I can say, it's not about 1,000 hours. It was 800, which is almost 1,000 hours. No. What if you actually documented it? I've spent 1,000 hours researching the Great British Pound, and I am an expert. I can write a book like British Pound. Okay? But see how sometimes when you go through trading and you're trying to become a successful trader as an amateur, and you go through these struggling moments, and it's dismay. You know, when you go through several months and you're not getting the success you want, and you're like, man, oh, it hurts, right? I mean, it's humbling, isn't it? Well, what if you addressed that by taking control of something? You have to control something, because you can't control your success, your outcome. Those are always variables. You can get yourself into a good trade and still lose money, and you say, man, it must be me. No, this is how things turned out. So on the side, you should have something you can control. You can't control the market, but you can control whether you spend 2 hours today researching the Great British Pound. That you can control. It will take time. It will take sacrifice. You could be watching Dancing with the Stars, but instead, you're on the Bank of England website again. Man, why are you always at the Bank of England website? Okay? Because I'm dedicated. Because I have a sickening work ethic. You see what I mean? That's why. Hey, I'm writing a book. Just look at it that way. I'm doing research for my book on the Great British Pound. So just control it. I mean, seriously, you should probably know, if you're going to be the expert of the Great British Pound, the last 200 years of the Great British Pound. I would start. Well, I wouldn't start there, but eventually I would end there. I would learn everything I possibly could know. The last 200 years of the Bank of England. Okay? You should have posters over your wall of the last 25 chancellors of the exchequer. Remember? Alistair Darling. I used to love saying that. Who's the Chancellor of the Exchequer? It was Alistair Darling. What an outrageous name for an outrageous position. Alistair Darling, Chancellor of the Exchequer. Outrageously English, huh? So anyways, it's some other dude now, who cares? But anyways, become an expert, fall in love with what you're doing. That's the way to do it. Because that's the other hidden gem, right? One day you want to raise money. People can see in your eyes, hear in your voice, that you're absolutely in love with what you do. You understand? They're like, this guy is passionate about the Great British Pound, and he can back it up with 1,000 hours of research. I know I don't have that. I'm just a millionaire. So you know what? Here you go, David. I'm just a real estate millionaire. What do I know? But I do know that I want to be in the foreign exchange market. You seem like you have a love and a passion, but also a real deep knowledge. And I would like you to trade my money for me, because I believe you will do a better job than I certainly can. And the idiots at Deutsche Bank ain't going to do it for me. So here you go, man. Right? Keep 30% for yourself, buddy. Make me some money. Now get out there, right? So you start, you're a British pound only, right? British pound ultra long fund. And that's it. I mean, seriously, guys, there's the path. I'm trying so many different ways to outline it for you so that maybe you can actually see it. I wish you could see like runway lights at night. I'm trying to like line them up for you. There it is. And now you have to do it. Right? 2 hours a day. How long is it going to take you to become an expert? Well, 2 hours a day, 30 days, right? A month. So that's 60 hours a month, right? Yeah. So it's not even a year and a half, right, David? Too much for you, right? You know, I must do 20 hours a week just for my Harvard education. And I still have to do all my other stuff too. It's nothing. It's pathetic to think 2 hours a day is too much. I want to become a millionaire. I want to have a control over my life. I want to be an expert. I want people to treat me with respect. But I don't know, man. Of work. Gee whiz, that's like an MBA. Uh-huh. Right? It should be laughable. Like, oh yeah, I'll be an expert in less than 2 years. Good. Oh, that's too much, Wayne. That's ridiculous. I want to be like my last video. What did I call it? How to become filthy, stinking rich in Forex. Here's another way to become filthy, stinking rich. Work your ass off for the next 2 years. Oh, that's too much, Wayne. I can't do that. But how many hours have you spent in front of your charts trying to pick up 20 pips here and 5 pips there and just throwing down a bunch of trades? How many hours a day are you doing that? You know what I mean? So come on, guys, get fired up. I got you on a 2-year plan for success. Now you got to fight for it, man. Make it real. So, anyways, I say it every week, every day actually, but I don't want to diminish its importance. But peace on earth. May the pips be with you. May your profits be above average. And remember, I do love you. I want you to succeed. You're on my team, and I care about you. And I know it's tough. I've never said it was easy. So here we are laughing like, look, all you have to do is put in 2 hours a day for the 7 days a week for the next 2 years, and you'll be on a good path. That's it, guys. That's only one of the things you need to do. That's it. But that's a hard thing to do. Just realize 95% of the people won't do it. That's why I said on Friday, I'm like, I can beat 95% of the people. Because 95% of the time they don't try. So why is that hard? All you need to do is just do it. Yeah. And that's why I'm so worried that we talk about plans weeks in advance, and then all of a sudden we come back and I'm like, look, we moved 500 pips. How many did you get? And you're like, I lost 200. You lost 200. So we need to make sure you have plans of your own. You're trading in that bias, but I don't have a bias. Well, then, let's get you the expertise you need. And remember, and I'll leave it here, okay? I'll leave it here. But there's so much money in the world, it's just sloshing around right now. The world is drowning in liquidity. There is so much money in the world right now to be invested. They need someone that says, I've spent the last 2 years researching and analyzing the Great British Pound. I know everything you could possibly know. I have a PhD in GB, right? GBP. Um, and let me tell you the next 6 and 12 months what's going to happen to the Great British Pound and why. And let me trade it for you. And people will say, you know what? I'll give you a shot. Okay? And then, of course, you need to be able to do it. So pick a currency, guys, anything. And if you can have a marketable idea, a long-term bias based on technicals or fundamentals, I don't care what it is, and you can trade it, a lousy 5% a month. There is millions and millions and millions and millions and millions and millions and millions of dollars that would love for you to trade. You will have investors lined up around the block, around the corner, around the world. And I am not joking. They would be thrilled to catch 5% a month from you. So, why don't you work really hard for the next 2 years? Become a master of something and be able to trade that one thing and knock down 5% a month. All they're very reasonable, right? Specific, measurable, attainable, realistic, and timely. So it's yours, man. Fight for it, capture it, make it real. I'll see you tomorrow, guys. Thanks for being on my team.